Good morning, good morning, good morning, guys. Welcome back to an interesting and busy morning for the markets. The overall stock markets here opening up are, not doing anything too crazy. In fact, they're all down right now here a few minutes after the opening bell. But, sorry, just getting all my stuff together here. But, a very interesting weekend over the weekend where Bitcoin was doing really well. It was really, I would say it was a weekend for the currencies and commodities really taking off. Um, Bitcoin, Ethereum over the weekend both don't think they hit record highs, but very close to it, up over 61,000 for Bitcoin for a brief moment yesterday. It looks like its high was back in, was it mid-March when it hit 61? Was that the high? I think it was. So again, it looks like, each one of these dips, it's stair steps, right? It'll go down for a little bit, then back up. And sure enough, that's what happened. It dipped down to 50 not that long ago, just a few days ago. And as soon as it dipped down to 50, I was telling you guys, hey man, it might be an opportunity to throw a few dollars in right now. And then when it dipped down to 55, it was the same thing. Hey man, today might be a good day to throw a few dollars in. And sure enough, here we are. So here we are now, a few days later, because that was just early last week when that happened. And next thing you know, here we are. So it is a sorry, trying to do multiple things here on my other computer at the same time. Anyway, so here we are now back at 60 and nearing a record high. I mean, if things keep going north today, which today they're kind of up and down. They briefly hit 61,000 overnight, and they went right back down to 59, and now they're at about 60,000. So it might be a really good opportunity though to just get back up to another record high today. I think there's a really good chance of that. Ethereum also nearing its record overnight. Actually, you know what? It may have actually hit its record overnight. Looking at the numbers here now, 21.9714. That was a record. So that it hit that record overnight. As I've been looking at it, Ethereum to me has been doing better over the last month than Bitcoin. Let's see what the actual numbers say. Over the last month, Ethereum's at 23%, and Bitcoin over the last month is only 7%. So yeah, huge difference. Doesn't mean Bitcoin's doing poorly, just doing much well. But then Dogecoin, for example, is at 29% over the past month. Dogecoin probably had the most interesting weekend. I was not following it when it happened, but apparently our boy Papa Elon made a tweet, and that sent Dogecoin up by a ton. About 20 something percent surge on, was it Sunday morning? I think it was. So interesting weekend there for the cryptos. Interesting weekend for some other things. The Amazon vote got apparently finalized. The Amazon vote for the union, it went to 71%. I think of the voters voted it down. Not just because I'm a stockholder, but just for the good of free market. I think it's a good thing, but also at the same time does not mean that I want people to be treated unfairly. So I think it's two different counterbalancing arguments about it. But for the most part, I fundamentally don't agree with unions in a free business market, which Amazon clearly works in a free business market. Again, the only time that I could understand how unions actually make sense and could actually provide a benefit in a closed labor market, such as professional sports. I think it's a perfect example of it. All the professional sports leagues have their own labor unions, and it makes sense because if you let's say you play baseball, and if you play baseball, then um, you play in the MLB, and you don't like the labor tactics and the way that whether it's financial collective bargaining or any of the other things that happen. The owners might say you need to play 4 games a day and screw your health and all this stuff, and we're going to make all the money and the players get paid nothing, yada yada yada. They could do all those things, and if they weren't able to unionize and to have a counterbalance against that, then the owners literally could do anything they want, because not only in baseball is there no other no other serious professional sports league, but even worse, but baseball is actually specifically exempt. This is bizarre. The Major League Baseball Association is specifically exempt from antitrust laws in the United States. It's a super old precedent that was created many long time years ago, but that is exactly how it is. And so Major League Baseball does actually have the freedom to and the right to completely block and create a monopoly, a business, market monopoly for professional baseball in the United States, completely legally and free and not against anything. There's nothing people can do about it. So that is why it does make sense for there to be a labor union in professional sports. And same with the MLB, they can't, or sorry, the NBA, NFL, whatever, they can't just up and quit and join that other great big professional basketball league to play basketball in. Now, if there is a rebellion and a second league that really competes against those, which we've never found there to be a good competitor in basketball, baseball, or basketball and football. There's been tons of attempts. I mean, the last significant attempt was, the last truly significant attempt was the ABA in basketball. There was the USFL in football back in the 80s, which actually for a very brief period of time looked promising. But I mean, it's always these new leagues trying to come up and in a way compete against the NFL and in a way not, but they'll never take them out. Anyway, so I think the whole labor union thing is again not that people should be treated unfairly by any employer. However, if you worked for Amazon and you felt you were being treated unfairly and getting paid unfairly or whatever, you have the absolute freedom to quit and go work for somebody else, and go work for hundreds of other companies out there that you believe are better companies that provide better service and appreciation and benefits and whatever your to their um, to their employees. And if more and more people do that, then that will then force the hand of Amazon to change their policies, because otherwise they're not going to get any employees. But as long as people still keep, really wanting to work for Amazon, then they're they're still going to do what they do to treat people at least equitable. I'm not saying they treat people amazingly well, but equitable across other business markets. So I think that is why we saw a downvote over there. I think it was a handful of people that really hate it. There's a handful of people that hate every job. You could, I mean, these people that hate Amazon, that work for Amazon right now, that hate Amazon, they probably loved the chance of working for Amazon. They just gobbled up the opportunity to work for them and thought they were the greatest thing in the world until they got hired. And then they're people that can never be satisfied no matter what. So they're going to complain about anything they can. And next thing you know, they are going to sue Amazon. And are they going to quit? Probably not. Sadly, they're going to continue to work for them. Um, and then now be a pariah inside their community. I just, to me, if you hate your job, don't work there. Right? If you hate your job, go work somewhere else. And when Amazon sees that 50% of their employees are just going to up and quit tomorrow because of how crappy they are, then that gets their attention. It doesn't necessarily get their attention to say work for or to vote uh, for this union and of course not even get it going. Anyway, a little bit of a rant there about unions. Today is about the current market. I know my opening comments in the morning a lot of times sometimes rant because I want to see what happens with the market rather than just telling you guys exactly what you can see on the screen. But let's see what we got. Oh man, well see that's exactly why I do that. Look at it. Look at GameStop. You know what? I'm gonna put GameStop on the big screen because we are gonna see some action today. Oh, there's GM. GameStop. We'll put TQQQ over here on the bottom left. There we go. GameStop, what is happening to you today? It even says it in the caption, in the title of today's video, that you're up. And then you opened at what, 158, shot up to 163, and it bottomed out to 150, the lowest it's been in a very long time. Man, interesting. AMC also tanking, it's down 4%, down to 9.02. I have a buy order in for AMC at 8. I don't know if it keeps tanking. I might have to lift that buy order just because I don't want it to. If it tanks down to 8.5 or 8.2, 8.3 here in the next hour, I might lift that buy order just because then I think it's going to keep going down farther and buy it maybe when it starts to turn northwards again. But we'll see. Looks like it's stalling right now. Looks like it went to 899, but it's stalling. Same with GameStop. So hopefully there's a little bit of resistance there at 9 and a little resistance here at 150. Just some psychological resistance there. Probably a lot of limit orders were put at those two numbers. So that might give it the resistance it needs to bounce back. But we're looking over here. TQQQ is down to 105. It's down 1.5%. KOSS down 4%. Express down 3%. So all these guys are down between 3 and 5%. Not an impressive opening for the market out here. Nasdaq's down 0.62, Dow's down 0.17, and S&P's down 0.22. So nothing crazy, but not good. I mean, it's like Nasdaq, for example, is down 0.67 now and trending down. On the other side, the reason why I was saying earlier that it's a commodity and currency market is oil's up. Oil's back up above 60 for the first time in a while, in a couple weeks. Or not in a couple weeks, first time since the 4th. So first time in about a week and a half. And it's going up, so we'll see. Maybe that also might be because the contracts, I haven't looked, but usually contracts expire in the middle of the month. So it could be that contracts are coming around for expiration. That could be what drives the change in the price. Treasury yield, 10-year Treasury yield at 1.675. It's up about 0.5%. Nothing crazy there. But overall, a lot of the markets are down except for oil. Surprisingly, both oil's up and Tesla's up. Go figure. Uber's up. Zoom is down. Other opening stocks like Southwest and Ford are down. XOP is up but trending down. DoorDash is up again. That's interesting. DoorDash up to 144. Grayscale Bitcoin Trust. Again, I have a good amount of that. It's just a holding for Bitcoin value. I was talking about Voyager over the weekend. Of course, Voyager is going to look good because Bitcoin's looking good. So it'll trend with the momentum of Bitcoin. That's why I should have bought in last week when it was down 16%. It's up 22% since that. Since it bottomed out after that night, and it got down to 23 something. Even if you bought it at the open the next morning at 25, still up 12% since then. Since that bottom out at 23, it's up 22%. That's insane. MicroStrategy up as well. as Riot Blockchain, of course. Riot's up 7% already. Jeez. So yeah, a lot of the Bitcoin related stocks are riding the wave right now. Microsoft buys Nuanced Communications for $16 billion. Wow. That is an interesting one. I can't say I know anything about this deal, but that's an interesting one. Isn't Nuanced, didn't they have, didn't they build a competitor to Adobe, sort of? I don't know if it's the same Nuance or not. Voice recognition technology. I think it is, but I guess their voice recognition technology was more impressive than their like OCR, their type recognition, which is kind of their competitor product to Adobe, or at least that's what they're known for. Probably not what their most impressive thing is, and that's why the voice communication or voice recognition technology is going to be higher. Well, interesting opening to the market. It's driving my portfolio down about 1%, which sucks. So some of the major tech stocks are down, including some of the other growth stocks that I have a decent holding in. So the only thing that's really doing good for me right now are some of my oil related stocks like UCO and XLP. And my Bitcoin, of course, is doing well. And my Bitcoin trust, I should say, is doing well. I track my actual Bitcoin somewhere else. Alibaba, I don't have a lot in Alibaba, but it is up. It's up 7.6%. Sorry, 7.6% today. What news did they have? Alibaba gains. I don't know. I don't see a whole lot going on with Alibaba on the news. I'm sure there is something that is just not seen here because they surged right after the market opened up to 242. They've kind of cooled off, but still really hot. Interesting. How's Microsoft doing after this announcement of this acquisition? It's down a little bit, but nothing significant. I would say it's even though it's down 0.26%, it's outperforming the market right now. So that's an interesting one. Very interesting that I haven't seen much going on with the news. Let's see how the volatility looks though. Let's go back to the 5 day. Yeah, it's really, I mean, it's a little higher than Friday's, but nothing crazy. So I figured with some major news from Microsoft, we'd see some volatility. We're not really seeing that. So that's interesting. All right, let's see what we got here. GameStop continues to drop, man, down to 146. Today, I mean, today could be a D-Day for GameStop. So let's keep an eye here on GameStop. We're going to also zoom in here on AMC and see where it is. It looks like it crashed, tried to bounce, and is going down again. It looks like this is going to come down again below the low for the day. GameStop to the low for the day, KOSS and Express as well. So keep an eye on these guys. These four could be a D-Day type of situation for these four. Let's turn on Ameritrade and see what these four have to say.
Year to date, almost 21%. So I think that the technology sector within travel is going to continue to lead, the balance, whether it be the airlines or the cruise ships, but it'll be a direct beneficiary of turning the world back on again.
The two main categories that these companies fall into, of course, hotels, entertainment, and then right there behind it is software and IT. So a lot of these are tech plays in a certain way as well, which I do like the reminder there. Sam, thanks for the update. We're going to do some trading here with the ETF now. Appreciate you joining us. Sam Masucci, founder and CEO at ETFMG. Let's bring in Tom. All right, so let's get bullish on the thing, Tom. If we're looking at a potential bounce back here after some weakness, how would you trade this ETF that does have a pretty healthy options market? I mean, there's some decent volume, not a ton, but you can trade options here.
Yeah, and I think you have to look at this. It's not highly traded. That's why we don't see weekly options in there.
Right.
But to his point, there's ways to play this where maybe you don't have to buy the shares of Away just due to the fact that, hey, if I buy 100 shares of that ETF, I'm going to outlay about just over 3,000 in capital. How can I take advantage of that using the option market where I'm not going to outlay that much capital, but I can still know what my risk is going in on a trade? So I just went out to the August monthly series. So you've got about 130 days until expiration. So you're giving yourself a lot of duration for a comeback or a further extension in the moves we've seen in some of the components within this ETF. And just going and buying a stock replacement, so buying a deep in the money call. And in this case, I'll use the August 28th call, which is just over $2 in the money. It's about a 67, 68 delta, so it's going to react just like the stock does for the most part, right? And if I pay a $4.80 debit for that, that's going to be my risk on this type of position. I outlay I can buy one call, outlay $480. That's the most risk I have on this trade. Now, if I pay $480, my break even is going to be all the way up there at $32.80 to the upside, which is still below the all-time high that we've seen in here. But if you see a continuation in this travel industry and a lot of the components that make up this ETF, this might be a lower cost entry point to play it to the upside, but you're also giving yourself duration. I think that's key here in this type of trade. If you're going to do a stock replacement, go further out in time. It might cost you a little bit more option premium, but at the same time, you're giving yourself time in this type of strategy where you're giving yourself 130 days in this trade for the ETF to go above that break-even point of 32.80.
Okay. All right, so thinking about the potential pickup in this in a pretty notable way. I mean, $32 would put us back kind of in a general trajectory towards the previous high at 34, and $30 right now. We'll see if we can hold it. We had that gap up rally earlier this year in February for a way, right at about where we are today. So pretty interesting level as the Russell 2000 and some of these reopen themes starts off weak this morning. Uber, though, Tom, is up, and they had some pretty solid numbers. What'd you make of the report, and then how do you want to trade it?
Yeah, pretty substantial that we're seeing record-setting numbers out of Uber when, lots of portions of the economy still aren't open. So this is a pretty big surprise. Get the CEO giving some comments here in a couple hours, but this has definitely been one of those pandemic winners due to the fact that, hey, Uber Eats offset some of the losses that we saw in the ridership numbers, but they expect to be profitable on an EBITDA basis by the end of the year. So that's a positive also. So how do you play Uber if you think that it's going to maybe go higher? Well, I looked at a different option strategy. Instead of just buying Uber outright, I looked at buying a combination type trade where I'm going to buy an at-the-money call, and in this case, I'll go out to the June cycle, so about 67 days till expiration. You're also going to capture an earnings event here. And I'll buy the 60 strike call and then against it to finance that. So it's pretty aggressive. I'll sell the June 57.5 strike puts, which are about $2 out of the money to the downside. That helps me finance the purchase of my call and offset some of the option premium that I have to pay for it. Now, both legs of this type of trade are bullish in nature, buying the call and selling the put, right? But I'm giving myself a cushion to the downside. If I pay roughly about $1 debit for this combination trade, that's the risk I have on it. Where I'm going to be profitable at expiration is above $61, which is the break even on this. Where I start losing money is below that break even, but it falls off substantially under 57.5, the put strike that I sold. Now, you've got to be ready to buy the shares at a lower price entry point if it does settle below 57.5 at expiration. That's what I meant by this one being a little bit more aggressive. If you think that Uber over the next 2 months is going to continue to move higher, get back to those all-time highs above $64 a share, this might be the way to play it because you're offsetting some of the price with the put. But you got to remember there's a lot of risk to the downside here, and you have to have the capital to buy the shares if you hold this position through expiration and the stock goes below 57.5.
Okay. All right, two bullish ways here to get exposure to the reopen theme on a day where it's dipping. The Uber with some good numbers, showing ridership picking up very much is a nice little shot in the arm for the group. Just not going to do it on a morning where the Russell's down 0.75%. Airlines getting hit too. Thank you, Tom. When we come back, let's talk some more about this group with the cruise lines. If you read Barron's over the weekend, a little bit of a heads up that the companies aren't quite the same businesses as they were before the crisis.
And the stock goes below 57.5.
Cruises and all right, two bullish ways here to get exposure to the reopen theme on a day where it's dipping. Uber with some good numbers, showing ridership picking up very much is a nice little shot in the arm for the group. Just not going to do it on a morning where the Russell's down 0.75%. Airlines getting hit too. Thank you, Tom. When we come back, let's talk some more about this group with the cruise lines. Read Barron's over the weekend. A little bit of a heads up that the companies aren't quite the same businesses as they were before the crisis.
And the stock goes below 57.5.
Cruises. All right, two bullish ways here to get exposure to the reopen theme on a day where it's dipping. Uber with some good numbers, showing ridership picking up very much is a nice little shot in the arm for the group. Just not going to do it on a morning where the Russell's down 0.75%. Airlines getting hit too. Thank you, Tom. When we come back, let's talk some more about this group with the cruise lines. Read Barron's over the weekend. A little bit of a heads up that the companies aren't quite the same businesses as they were before the crisis.
And the stock goes below 57.5.
Cruises. All right, two bullish ways here to get exposure to the reopen theme on a day where it's dipping. Uber with some good numbers, showing ridership picking up very much is a nice little shot in the arm for the group. Just not going to do it on a morning where the Russell's down 0.75%. Airlines getting hit too. Thank you, Tom. When we come back, let's talk some more about this group with the cruise lines. Read Barron's over the weekend. A little bit of a heads up. The companies aren't quite the same businesses as they were before the crisis.
And the stock goes below 57.5.
Cruises. All right, two bullish ways here to get exposure to the reopen theme on a day where it's dipping. Uber with some good numbers, showing ridership picking up very much is a nice little shot in the arm for the group. Just not going to do it on a morning when the Russell's down 0.75%. Airlines getting hit too. Thank you, Tom. When we come back, let's talk some more about this group with the cruise lines. Read Barron's over the weekend. A little bit of a heads up that the companies aren't quite the same businesses as they were before the crisis.
And the stock goes below 57.5.
Cruises. All right, two bullish ways here to get exposure to the reopen theme on a day where it's dipping. Uber with some good numbers, showing ridership picking up very much is a nice little shot in the arm for the group. Just not going to do it on a morning when the Russell's down 0.75%. Airlines getting hit too. Thank you, Tom. When we come back, let's talk more about this group with the cruise lines. Read Barron's over the weekend. A little bit of a heads up that the companies aren't quite the same businesses as they were before the crisis.
And the stock goes below 57.5.
Cruises. All right, two bullish ways here to get exposure to the reopen theme on a day where it's dipping. Uber with some good numbers, showing ridership picking up very much is a nice little shot in the arm for the group. Just not going to do it on a morning when the Russell's down 0.75%. Airlines getting hit too.
Why they're still trading below those pre-COVID highs.
Read Barron's over the weekend. A little bit of a heads up that the companies aren't quite the same businesses as they were before the crisis.
Story of survival over the last year for these companies. It's really a story of companies kind of playing, prevent defense as opposed to really anything offensive, and they're going to try to survive to the other side. For context on performance, going back to the beginning of last year, I've been using January 1st of 2020 at the beginning of many of my charts to capture the run-up and the fall and the recovery for the names across the different industries here. Across the board here, Royal Caribbean is the best performer of the three. It's down 35.8%. Cruise liners are down 15.8%. From 2020 here, as for this article in general, there's a lot of real information from very apparent, and it really is a cautionary tale. I'm going to stress that, and we'll dive inside the reasons why. We talk all about how advanced trading scholars reopening is on the horizon, sentiment is strong, whether it's ignited here, it is one of the trends that want to go on the recovery, but all may not be what it is. Where these customers in particular is the best performer, whether the form of not nearly 8% until the beginning of the pandemic, that is coming at a steep price, and that's really what is stressed within this article here. That note is apparent. For example, for the industry before, the three major players, Carnival, Royal Caribbean, together they have
shut up my stocks. Doesn't seem like there's going to be an news flow, right? I mean, still got good positive travel that you're seeing. Pickup on traffic, airline numbers have gotten great. Cruise lines that are consistent, pretty much booked the next year will also be responding. It doesn't really seem like the weakness in stocks over the past about 2 weeks corresponds with any particular headline necessarily.
Yeah, but we have to still consider the fact that that first cruise ship has not set sail yet either, Oliver. So you might see numbers picking up, you might see bookings at hotels doing better, Airbnb might be doing better, Uber might be doing better. But we can only advance so much. At some point we have to see sales from ports, and we have not seen that yet. Also, we've seen a resurgence in tech recently as well, as some of those rotations have started to play out in the reverse direction. Some of this comes down to opportunity cost and how long you want to be patient. Of course, those are some of the questions that investors are probably facing and asking themselves if they've had some of these positions, especially if they bought them at substantially lower prices during the beginning in the middle of the pandemic.
Down about 1%. I guess the natural response to the downgrade. The stock has been struggling for a couple months though, Ken. And the analyst here says $150 in the price target. It's not exactly a very bearish downgrade. down about 1%, but the overall market supply chain is just a little
definition of luxury, but anyway, it's back to the break. This stock is still 100% off its 2020 low. It's 40% off its March 23rd stock. We've had a dramatic drop. It has come back to this base right now. 3 weeks. But if you look at it, it's been trading somewhat sideways here for the last 3 weeks. 16 to 22. In the bigger picture, the 20 levels is important right now because this stock is trading between 10 and 30 over the last 2 years. $16 call. Again, the stock is going to show the strategy. $16 call. 16 is this low on this last week. And again, luxury, but anyway, look how the last call on this stock is still at levels. The July option buys 4 times. The July option is $50 more expensive than the May option, but it's a ton more time. So we've got 3 months to see the latest level. 16 to 22.
All right, so you're looking for a little bit of time here. You're not rushing this move, and obviously going the route of in the money call right now. If it doesn't make that big move, you're going to look to basically get out later on in the summer, in a couple months.
Well, that's the plan. It's got a lot of time, a high delta of 75%, so it's going to act like the stock on the outside. This little range, this little sideways range here, breakout about 22, that target's up to 28. Again, we were at 30 just a few weeks ago, so there could be a scramble squeeze to get this quick. But again, it's about probability. Being long for 60, that's that extreme low, is a good reward to risk play. You have a limited risk option. The expiration premium on this is about 75 cents higher than it is right now. So I'm not, I don't need a whole lot. I just need a modest underlying stock. And if we get up to that, 26, 28 level, this operate's gonna be, worth triple what it is right now. So it's a chip. It's reward response to recovery.
Okay. All right. That's our cue to run, Alan Nuxman. Appreciate the walk through here. Focus strategy, St. Paul research. We'll get back and talk about the consumer. Everyone's watching inflation numbers. We've also got a pretty big here to look at retail sales as well coming up. And so far, the stock chart is suggesting there's a big sea change happening here with all-time highs in companies, or rather, multi-year highs, and companies like Alibaba, Cap, et cetera. We'll bring that back.
Guys, let's take a quick update. We're nearly an hour into the trading day, and GameStop continues to fall. It's down now nearly 11%. Bottomed out right here and tried to make a tiny bit of a comeback from 146 and got back down to 141. Not good news. Let me zoom to this chart out a little bit more. Not good news out there. If you're just joining now, it opened at about 158. Quickly bounced right up to 160. Really quickly. Within what, about 20-ish minutes, from 163 down to 140, and has really just not been able to make a comeback. So it's at 142 now. It keeps trying to make little tiny bumps, but it is not looking good. There might be a tiny bit of resistance at 140. Let me do this. It's hard in this sense because The price has generally been going down for quite a while, except for this bump right here. We went to 112 and back up. But ever since right here, it's been dropping pretty consistently over about the past two trading weeks. Let me do a 10-day here. And so that's the lowest it's been in at least 10 trading days. So it's hard to see, is there any sort of technical resistance that it could bounce off of? No. I think the only thing you might have going for it is a psychological resistance at 140. I said that this morning at 150. It broke right through that. So, right about here is at 150, and we're just kind of bouncing off that. And it went, so I think if it gets below the 140, going to the 130s, 139, whatever, we might see it continue to drop. Same thing really over here at AMC. Had the same type of thing, a little bit of a psychological resistance at 9, and it's still kind of there. It's just, coming up above 9 now, but it's gone to there. But AMC did not go up right after the open like GameStop did. It tanked almost immediately. And it's down now only 5%. So it's not down as much as GameStop, which is now down 11% ish and just down to 140.75 now. And it's continuing to fall. Now, over here in the bottom left, we've got TQQQ, which is a triple leverage ETF, follows tech stocks, and similar to the QQQ market, just basically a 3x. And it's doing okay. It's below. It's negative slightly today, which let's see what that translates. I haven't looked at the broad markets in a while. So the Nasdaq down 0.43. Let's see what are we seeing here now? About an hour in. 10-year Treasury yields up a little bit. Nothing crazy. It does kind of look like some of the tech stocks are bouncing off the bottom and coming back. So that's good. We're seeing Facebook, Apple, Amazon, Netflix, Google, all of them opened down and bounced down, and they're now trending back up slightly. They're all still negative, but slightly trending up. Let's see what's doing good today. DoorDash up 3.5. Grayscale and Bitcoin up 4.5. Almost actually up. It dropped down to even, but bounced back up. Churchill Capital down even at 1.5. It's down to 22.63. That's the lowest it's been in quite a while. Let's see. Churchill is now the lowest it's been since March 30th. So lowest it's been since March, which is pretty significant. So I've been looking for a buying opportunity at Churchill 20, and it might get down to that. I'm not really sure if it will, but it might. AMC continuing to go down. Now it's 8.9 on this next run down. Looking for good news today. Riot Blockchain's up 9.18%. MicroStrategy at 1.92. The wager up. It started going down, but it's still up 3.82. So Bitcoin related stocks are doing well. Roblox is doing well. You're in Roblox. It's still not up to its high of 79, but it's up to 74.95, so not bad. So for goodness, that had a standing by over, I think, 60. Lowest that it got to was 62 on March 25th, so it may have missed the but that's fine. I'm still sketched on the valuation. We're seeing Bitcoin and Ethereum still kind of just bouncing around 60, or Bitcoin bouncing around 60, Ethereum bouncing around 20-50-ish. Dogecoin still kind of trending down after its huge surge over the weekend, but still really high. Still over 0.7 or 7 cents right now, which is pretty bananas. So anyway, let's continue to watch the market here. We see KOSS trying to make a little run. You can see it. I don't think it's gonna. I don't think it's gotten anything. And right at the same time that AMC did this morning, I don't think it's gotten anything. Express, same deal. So really, all of these are down. I'm seeing AMC 6, KOSS 6, Express. Almost all of these are almost down the exact same amount. Kind of crazy, but they're so similar. With GameStop losing the most. It's going up slightly here to 142, but it's still not good. It's still 10% down. I think it's going to continue to sell off today. Just interesting that it bounced up right out in the open so greatly, but then it just took a nosedive afterwards. Anyway, I'll turn the volume back to the trade and you guys can watch what happens.
Short-term gains. L Brands, which has Bath and Body Works, Victoria's Secret, Pink. They've certainly benefited from the at-home trend within the Bath and Body Works profile. Victoria's Secret has done well in staging its turnaround, bringing back swimwear, and really repositioning itself in light of what the new consumer is looking for. Tapestry is another one that's done well with Coach, Kate Spade, Stuart Weitzman. They've really focused on their acceleration program, aimed at becoming a more lean and responsive organization, and significantly ramped up their data and analytics capabilities. Gap is another strong performer, arguably one of the strongest performers in retail stores over the past year. Because they were really secret, aggressive, and pivoting. They certainly benefited from the at-home light of the pandemic and the Bath and Body Works profile. Victoria's Secret has done well in staging its turnaround and really leveraging their repositioning itself in light of what the
One of the things we talked about earlier today for cruise lines is that
Tapestry is another one that's done well with Coach, Kate Spade, Stuart Weitzman. They've really focused on their acceleration program, aimed at becoming a more lean and responsive organization, and significantly ramped up their data and analytics capabilities. Gap is another strong performer, arguably one of the strongest performers in retail stores over the past year. Really secret, aggressive, pivoting. They certainly benefited from the at-home light of the pandemic and the Bath and Body Works profile. Victoria's Secret has done well in staging its turnaround and really leveraging their repositioning itself in light of what the consumers did really remarkably. Tapestry is another company that's understood the overall trends of other diligence. They've really focused on their acceleration program, aimed at Tapestry, Gap, for example, brick and mortar, still ramped up their data and analytics capabilities. Gap is also prior to the pandemic, arguably one of the really understanding just how they're leveraging and how much they're pivoting their mortar and e-commerce sales. They really understand secret and version and facing the relevance.
assessment here on
resistance there again. That's at 1555, 1556 area. That's an important area. Now, when we see price pushing above that area, you see the RSI, the bond main, and you see that starting to break above the 65 area and ultimately above the 70% area. Then we're going to look for this to the bias of this trend to go from this intermediate term sideways consolidation that we've had into another uptrend. So that being the case, the upside target that we have from the analysts is about 1800. If we get some measurements, technical measurements on these patterns, that also takes us to 1800, 1850, somewhere in that zone. Again, momentum is strengthening. It's struggled to get below 50% over the last 2 months. So that is in and of itself showing that there's some bullish bias on this chart.
So there's bullish bias. I thought this was going to look a lot more complicated than it does as the chart got up there to 3 different patterns. Basically, I think what's important here is that even with the high that we're getting today, and the chart seems to suggest you want to fall through a kind of describe case breakdown.
Yeah, absolutely. Want to see some fall through. And we're in this environment as well where breakouts may struggle in this bull market since March 23rd lows of 2020. So we've been in this over a year. So once you start getting a little bit elongated in that bull market, breakouts have a tendency to rally and then pull back. And we watch that 1555 area, 1556. It may push below that. We're going to look for some declining volume. We're going to look for short range days that comes into that resistance or support area at 1556. Should we get above that, then we're looking for a bounce to be an indication that we have higher highs and higher lows. Presently, we have higher highs, a higher high, and a higher low. In this
Chart, like a lot else right now, is coming off of kind of a swoon and then pushing right back to the previous high without to that kind of breakout, right? Without that confirmation that consolidation or sort of just kind of dabbling at the previous record. So momentum on the side for the past week, but do we get follow through now? The question from James does think we will, and quite a bit. He pushed up price target to $1,800. So a nice run still left of about $245 left in the stock according to them. And it is on the high end of the price target ranges. JP Morgan still has a neutral on Chipotle. Their price target right now, $1,400, would err on the side of a little bit bearish at this point, given that would quite a bit back here from the latest push. Now let's keep going. Next on the list, Matt together upgrade from BTIG. Not quite as obvious a response to this one.
Yeah, right. And two is running this resistance even at the top of a downtrending trend line, or a downtrending trend line at the top of that single triangle, I should say. It's still been in a long-term uptrend. If we look back all the way to last March's low, again, it's been in this bull market. It's finding some, a little bit of consolidation in here. This is a very important point. It's at an inflection point. Should it break above this? Now I have a triangle, this descending triangle with that bottom, that support being around 130. If we can break above that, if we measure that, the width of that triangle at the whitest part too, that's going to take us, may take us all the way up into a technical target of 190. That's going to be above the 175 target. It's still been a long-term analyst target, which happens to be those February highs, the peak there of that triangle. So the apex of the triangle. So if they hit in here, technicals hold out, then we're going to see a pretty strong run. It still has to get through some resistance at about 158. That's just above, obviously above where we are now. It's struggling as far as momentum though. Every time it gets that downtrend line, Oliver, that RSI struggles at 50% and starts to pull back. Really need to see this breakout. We need to see a breakout with some prejudice, meaning that we're going to look for some are we seeing accumulation? Are we seeing buyers come in?
We are about to dip below 140 here on GameStop. Let's see where there it goes. 139.7, 139.30. Ouch. Hold on, jump below 140 there. Oh man. So right back up to 140. So we're going to continue to stay below 140 now. Below. AMC's broken below 875. Express down below. I have a buy order for Express at 225. Do not have one for KOSS, and have one for AMC at 8. Have one for GameStop. We have a long video. Let's get some buy order for GameStop. We're down 12% and below 140. So let's keep watching.
And upgrading it to buy from hold. So a pretty bullish note out, but not doing a lot for the company right now. That being said, we've got stocks under some pressure, so it is outperforming with just a 8 basis point shift to the upside. But early this morning traded at 149, so definitely a selling opportunity. Is there anything there to read into, Pat, on the day we get a good bounce? Investors sold right into it?
Well, that's always what we look for. People sell, buy where they bought before, they sell where they sold before. This downtrend, again, when we look at the momentum, struggling to get above 50%. If this had run into that resistance level, that downtrend line with a RSI that was above 50, I would say, yeah, we're looking at maybe a little bit of a small uptake, maybe an opportunity to buy into this dip. This is in a kind of an ambiguous state where we're seeing price unable to push above the resistance level, momentum unable to get above the 50% level on the RSI, but at the same time, to Wesco, it could not push into the sold area. So that's a downtrend. Again, when we look at the momentum, struggling to get above, puts us in a tendency to if this had run into that breakout to the upside downtrend, which we reactive to lower momentum that was above at 50 above today's high. Maybe a little bit of a
Pat, last one. Let's go to the downtrend here. Morgan Stanley on Plug Power. Stock is 7.5% right now. So they have been believers and said to buy it, but now say that $35 price target is not worth taking a stab at here at $30. That being said, we opened up the morning closed out last week around 33. So apparently the momentum weighing on the stock in a pretty notable fashion.
If this had run into that, so a downgrade after 60% drop, that's probably a little bit interesting. An important inflection point. When we think about whether or not there's going to be buyers coming in here, what we see is this tendency for price over the last 2 months to really kind of slow and downward push. In other words, that downward momentum is slow. We look at that RSI very not been oversold for the whole year, meaning it's not drifted below that 30% area. That being said, it struggled to get above that 50% area. So that resistance coming in at 40, that's at the top of the point dashed horizontal line. So when we see this point, this rounded type of a bottom start to come in, we're going to look for this to be an area where people may look at this to be a probable area of months. Let's call it the value, if you will, after 60% push to the downside. So we'll look for this to range back and forth between that horizontal support level there at $30, and we look for resistance coming in around 40. Now, the best case scenario, to fake some people out, shake some people out, we see it drop below $30. And here, see it push down below 30, see a really strong rally back up into that make what we call a hammer or some kind of a doji, this pattern where it opens and closes in the same spot, and then a continuation back above the value support level of 30. So shake some people out, shake out the long position, fake out anybody that thinks they should continue to short this, then we might see a strong rally up into that $40 area. This could be an area for consolidation. It is weak momentum-wise, but again, ambiguity comes into play because it just does not want to get oversold. So at least one spike to the oversold area, then a strong rally out of that may put a higher probability for a rally back up above 40 and maybe into above 40 back.
targets, as well as this $30 area. So this could be anybody's guess. I saw it.
Yeah, I mean, just totally, collapsed from the earlier levels we were trading at, and now with analysts basically saying that it's kind of done in that upside. That if you were going for it just for the trade, then obviously that's bad. It doesn't seem like the believers were convicted for the long-term potential. I mean, to watch the stock get halved after moving up so quickly. So $29 right now. You hold that line on the chart that you got there and find support. If not, then watch out below for plug power here. Thanks, Paddle Alley. Good stuff, Coach. On the technicals. When we get back, market data at the time, we've got equities starting off the week a little bit. Kind of done in that upside. Dive into it next. We're going for just for the trade. Obviously, that's bad.
24/7 access to diverse global markets. Right here.
That's why I added stock index futures to my trading strategy. Now when I see ups and downs coming, I'm ready.
Well played.
like
right, Trey, Mike, tell your team, I'm ready to see some charts. Okay, what do you got for us?
Yeah, so what we're going to be looking at is something that we've taken a look at over the last couple of weeks, and right now I'm starting to see a little bit of concern coming into the market. We've really had a powerful breakout out of these technical triangle patterns for the last few weeks, and I think we can move very quickly, and to me that's a little bit concerning as we get into the 500 and potentially in the
earnings. And this guidance has been weak from Jamie Dimon, that is, later from Wednesday. If there's any kind of wavering there on how quick this recovery is going to happen, you can see some reposition.
So when we think about the drivers for this, of course, CPI is an important inflation print, but there's also a lot of bond auctions that are kicking off this week as well. And we're going to get the 30-year. We've got pretty much the entire spectrum coming over the next couple of weeks. Mike, how big of a role is that going to play? And are we out of the woods on that?
Trying to see the market over here with TQQQ in the corner over here. It's like it's up, down, up, down, up. It's trying to make a comeback here, but it is not doing it just yet. I'm hoping that one of these runs makes a difference. Clearly, there is some market factors causing that to happen today. So just keep an eye down there in the corner. Of the four stocks we have up here on the big board, is a bloodbath today. So GameStop is on the board at the top because it's the one getting the most blood, down 11.6%. It is teetering around 140 right now. So it'll go back up like it is now, and it might go back down again. Hit a low of 139 right here. Opened the market at 158. Now it's up to 163, and it's just been bleeding ever since. AMC, although not down as far today, continues to drop, I think, at a more consistent rate than GameStop. GameStop just took this huge dip here from 163 to 141 in a few minutes, about 20, 25 minutes. These over here, AMC over here has just been more consistently dropping. 163 was its lowest, and that was just a few minutes ago. KOSS, believe it or not, took a little bit of a positive run right here. Let me zoom KOSS out. Overall, it's still pretty far down today. Come on, KOSS. There we go. Took a bloodbath at the open, tried to make a run, and it's sort of leveled out. Express is really looking like AMC today. It's like they are cloning each other. Let's see. Just before open and just before open. Their charts are very similar. Not perfectly the same as the last few minutes. So there is not 100. That's what I'm saying. AMC is more consistently down than the others. So who knows? AMC might end up with the worst day of 4. We'll see. GameStop, though, still now 140.8. It's making a little bit of a run here in the last few days, but I wouldn't expect that to consistently hold strong. Certainly, Blink 182 down. TQQQ is trying to do something up here. Let's see what's going on with the rest of the markets here. Let's look at the overall indexes. We are seeing red everywhere. 0.21 down with Dow, 0.55 down with Nasdaq, 0.20 on S&P, and the NYSE, if we follow that, it's 0.1. Those are just computer indexes there on stock report. Oil is still up. I'm not going to say positive, it's up. Some people obviously are thinking that's a terrible negative thing. Once it starts getting money back into the U.S. economy and putting people back to work in the fields, then I'll think of that $60, $70 a barrel as a good thing. But right now, it's only driven by foreign supply issues, then it's not necessarily great. Volatility index is up today. It's VIX is 7% and rising. I don't put tons and tons of weight into the VIX. Some people do. Some people consider it a huge market indicator. I don't always do because honestly, probably because I don't know enough about it, but because I see a lot of times just flying down in at times where it doesn't make sense. Now, maybe that's because it's reading the things that are not as easy to see. And so that may be the reason why I'm not understanding it correctly. It's way up today, 7.25%. Usually, when it's way up, that generally means that the stock market shows a high degree of negative volatility. Let's see here. What else is down? Gold is down. Most ETFs are down. All the FANG stocks are down, right? Tesla's up above 700 again today for the first time in a while. I remember telling all you guys when it went down to 599 just 2 weeks ago. On the 29th, on March 29th, it was 599. And here we are now. If we look back then, it's up 16% since then. So maybe not as big of a bounce as say cryptocurrency and its volatility. It is on the upswing right now. Is it going to get back to 900? I don't know. Like DoorDash up to 140. Let me say this. Tesla will get up that high. Will get up that high in the next maybe month, maybe not. Let's see what else is done. Most of the others of these emerging growth tech stocks are down. We're seeing Bumble, Neo down. A couple of them like Kodak is down. ARI is up. XLE is up. Grayscale is up 4.85% now. Nokia is down. Make is down. I'm sure Bed Bath & Beyond and BlackBerry are both down as well. Those are the ones that have them on. The price of lumber continues to go. I started tracking the price of lumber here recently, and I look at it every day, but now it's on my watch list just because, hey, it's insane. Just for personal reasons, I'm hoping to build a house in the next year, and so it's important to see what's going on. If you didn't know, lumber's up 34% in the past week. It is an all-time high. Right now, as we speak, it's an all-time high. 11.57.50 is for a random length bundle of lumber. Don't ask me what that quantity actually represents, but I can tell you, but it is all-time high. All-time high. It is absolutely bananas. It does have a great amount of volatility. I mean, things happen. So, like, for example, on the 15th of March, it was like 10, 15, 16th of March, the very next day, it was like 840. So it does have large volatility jumps and dips. But in between that, in between the jumps and dips, it is insane what it is doing. To just the market's just going. Yeah, same thing happened September. September 14th, 940, September 16th, 16th, 620. So it's a futures market similar to the oil market where the contracts drop off their monthly contracts. Right now we're looking at the May contracts. And so that's why you see those big drops, I believe, in so like September, middle of September, it happened middle of January, it happened middle of March, it happened. There's huge drop-offs in the middle of the month, probably because those global futures were down. Or some of future contracts were expiring 1 year ago. This was, of course, at the peak of, we don't know what's going on with coronavirus, 30, now it's almost that. Nearly 20, nearly 12. It's absolutely crazy. So that's what's going on with lumber if you're not watching it. Look at Voyager. Voyager is going downward now. Opened up because of the craze in crypto over the weekend. And I think there's some sentiment for benefit. The Coinbase IPO is supposed to come out Wednesday. We'll see how that goes. Right now, it is down pretty good amount. It's down 3%. But it opened way up, so it's down 10.5%. Riot Blockchain, MicroStrategy breaks together well as we're seeing cryptocurrency all doing very, very well. They're all down from their highs overnight, but still doing really well. All right, guys, let's get back to the news. It's 10 o'clock. Been open for a month and a half. Had a pretty good amount of you so far, so thank you guys for joining. And we'll get back to the news.
Kevin's point, though, if you put up like Bollinger Bands on the S&P 500, you'll see that we're up above that upper band. And so just getting some consolidation here over the next couple of days probably, would be a good thing given how far we stretched here in the near term.
And I do have that pulled up here. It's a little bit faint, so I'm going to adjust here. The width of our lines in real time, so we can see it a little bit more clearly. But Kevin, that's an interesting point. We don't often talk about the Bollinger Bands here on Fast Market, but you can see on Friday we tested the upper band of that
point, though, if you put up like Bollinger Bands on the S&P 500, you'll see that we're up above that upper band. And so just getting some consolidation here over the next couple of days probably would be a good thing given how far we stretched here in the near term.
How strong the markets really have been. And I do have that pulled up here. It's a little bit faint, so I'm going to adjust here.
the width of our lines in real time, so we can see it a little bit more clearly. But Kevin, that's an interesting point. We don't often talk about the Bollinger Bands here on Fast Market, but you can see on Friday we tested the upper band of that point. Though, if you put up like Bollinger Bands on the S&P 500, you'll see that we're up above that upper band, and so just getting some consolidation here over the next couple of days probably would be a good thing, given how far we stretch here in the near future. The markets really have been, and I do have that pulled up here. It's a little bit faint, so I'm going to adjust here the width of our lines in real time, so we can see it a little bit more clearly. Kevin, that's an interesting point. We don't often talk about the Bollinger Bands here on Fast Market, but you can see on Friday we tested the upper band of that point. Though, if you put like Bollinger Bands on the S&P 500, you'll see that we're up above that upper band, and so just getting some consolidation here over the next couple of days probably would be a good thing, given how far we stretch here in the near future.
What does this tell us? What do we take away
I do have that pulled up here. It's a little bit faint, so I'm going to adjust here the width of our lines in real time, so we can see it a little bit clearly. Kevin, that's an interesting point. We don't often talk about the Bollinger Bands here on Fast Market, but you can see on Friday we tested the upper band of that point. Though, if you put like Bollinger Bands on the S&P 500, you'll see that we're up above that upper band, and so just getting some consolidation here over the next couple of days probably would be a good thing, given how far we stretch here in the near future. And I do have that pulled up here. It's a little bit faint, so I'm going to adjust here the width of our lines in real time, so we can see it a little bit clearly. Kevin, that's an interesting point. We don't often talk about the Bollinger Bands here on Fast Market, but you can see on Friday we tested the upper band of that point. Though, if you put like Bollinger Bands on the S&P 500, you'll see that we're up above that upper band, and so just getting some consolidation here over the next couple of days probably would be a good thing, given how
over the past 2 years, Kevin, I want to get all these kind of market scenarios in here. What you really notice is either side, whether that's on the downside or to the upside. But of course, historical perspective of moving average as the market expands or moving as well. So they're pretty adjusting based on the market movement. Spend a ton of time outside those expand more than a day or two over the last couple of years. So very interesting, and it may be an indication of kind of that relative strength that you see point out, Kevin. Is one step forward, kind of market, one step back before a continuation. If you're a market trader, short-term trader, to this point, this is some information that's pretty important to argue with if you're making kind of a short-term position based off of moving average. As the market expands again as well. So whether you feel adjusting based on the market narrative to help you frequently here on the show, Kevin, which is the stock replacement strategy. We often call it, sometimes referred to as the war man's covered call, with the long call diagonal, which is kind of its traditional option strategy name. Kevin, June 130 calls, we're going way out in time in the sense of options and short-term trading beyond the earnings date. But we're using next Friday's expiration as a particular example, the 141 call. The first thing I noticed is there's not a ton of premium
buy the 245 put. So basically, you'll see this is selling a put spread. The 247, 245 put spread. Looks like that's trading somewhere between 25 and 30 cents. Tell you what, I'm going to put it in just a little higher, maybe at 30 cents. We'll just round it because this is a $2.50 wide spread. And the maximum loss on that spread would be $2.50 minus the $30 credit, 30 cents times 100, $30 credit would leave about a $220 risk on this if the stock were to fall in the next, like we said, 11 days, well below or below 245. Now let's hit confirm and send and just make sure that these are the right numbers. And let's say max profit $30, max loss $220. That all checks up. Selling one vertical spread, 247, 245, for a limit of about 30 cents. All right. The only other thing I'm going to do, and remember, you can always hit edit at this point, is change this from day to good till cancel, meaning that if it doesn't get filled today, maybe if the stock did drop a little bit overnight or tomorrow, that put spread could come up in value and then fill around that 30-cent credit limit. So I'm going to go ahead and confirm and send that one out. GTC, good to cancel at 30 cents, and we'll let that one work and follow Microsoft. All right, well, that's going to do it for our example trade. Now, coming up next, I'm joined by Mike Follett, and we're going to talk about maximum loss and maximum gain and how a trader can easily assess what those numbers are using several features on the Thinkorswim platform. Make it easy. All right, we'll be back with that in just a minute. Stay with us.
Feel that? That's the beat of global markets, the rhythm of the world. For most, the cadence of today. To us, the pace of tomorrow. It's people and machines uncovering opportunity. Cloud computing providing endless capacity. Blockchain making transactions safer and faster. New markets born where they weren't before. With ingenuity, technologies, and markets expertise, we create the possible. And when you do that, you don't chase the pace of tomorrow. You set it. NASDAQ. Rewrite tomorrow.
What do you look for when you trade?
I want free access to research.
Yep, TD Ameritrade's got that.
Free access to every platform.
Yeah, that too.
I don't want any trade minimums.
Yeah, I totally agree. They don't have any of those.
I want to know what I'm paying up front.
Yes, absolutely.
Do you just say yes to everything?
Well, I say no to kale. Yeah, they say if you blanch it, it's better, but that seems like a lot of work.
Now offering 0 commissions on online trades. We charge you less, so you have more to invest.
Technical traders, the chart master is in the building. Trends, support and resistance, key patterns, and technical indicators. The chart master has your live technical analysis throughout the trading day, only on the TD Ameritrade Network.
I'm Jenny Horn. Here's a few more intraday movers to keep on your radar. Alibaba shares are rallying despite a record $2.8 billion fine from Chinese regulators. China's State Administration for Market Regulation said Alibaba abused its dominance over its rivals and those selling on its platform. In addition to the fine, Alibaba will have to carry out a revamp of its operations and submit a self-examination compliance report within 3 years. The stock is now on pace for its largest percent increase since last July. Nuanced Communications is jumping after Microsoft announced it will acquire the company for $56 a share. This would imply a 23% premium to Nuance's closing price Friday. Nuance provides cognitive AI with a focus on healthcare applications. The company delivers solutions that aim to amplify human intelligence to increase productivity and security. This would be Microsoft's largest acquisition since LinkedIn in 2016. And iRhythm Technologies announced plans to stop offering the Zio XT service for Medicare patients if reimbursement rates remained unchanged. Following the news, the stock has shed over 35% and is on pace for its lowest close since April of last year. This would also mark its largest daily drop on record. The stock is down 6 of the past 7 trading sessions. This has been your TD Ameritrade Network Market Update. Now back to your first trade with Scott Connor.
All right, Jenny, thanks for that market update. Now let's take one quick look at the 4 major indices. And they're doing pretty much what they've done since last Monday after the first hour opening, kind of moving in a narrow range. Right now, the S&P 500 up less than 0.1%. The Dow Jones down about 0.1%. The NASDAQ down under 0.2%, and finally the Russell down about 0.25%. So again, not big percentage moves. Sort of a continuing trend we've seen for almost a full week now. But that could change going into earnings coming up. Now, let's talk about today's topic. And as I mentioned, one of the things we follow closely here on Your First Trade, and whenever considering a strategy, is defined risk. It's kind of on our option trader checklist, if you will. Well, let's talk a little bit about that in detail. And then to do that, let's bring in Your First Trade contributor and education coach, Brett Crowther. Brett, good to I'm sorry, Mike Follett. I'm sorry, Brett. That's my bad. It's Mike Follett coming to us also from Salt Lake City. Mike, good to have you here. And like I mentioned, this is an important takeaway, this sort of awareness, if you will, of max gains and max losses associated with the different option strategies. So which direction are we going to go in, Mike?
Well, Scott, and it's like you said a little bit earlier, you said, you know, there are some tools on Thinkorswim that allow a trader to easily access that information. So we'll explore that today. Really, it comes down to determining the max gain and the max loss parameters associated with really any option strategy. And that can be seen right on the Thinkorswim trading platform. So today you'll learn how to easily move a simulated trade or an existing trade to the Analyze tab to review and create a risk profile, which provides a snapshot of the potential gains or losses associated. And we'll also review the importance of verifying the reward risk numbers before entering any trade. Scott?
Got it. So it serves a lot of purposes here. Just getting familiar with the defined risk reward with an option strategy and even the verification process. I like that. That helps traders always become more consistent and disciplined. So are these the main benefits or value to learning how to easily access max gain and max loss?
Well, it's super important to understand and know the potential risks and rewards of any potential option strategy. Let me give you an example here. Traders that get involved with buying options, for example, buying options often have defined risk associated with the strategy. That means that there's going to be a loss limited potentially to the purchase price of the strategy. However, if the trader were to flip that and they got involved with, for example, selling options like short calls, well, those have the unlimited risk and potentially unlimited losses. And it's super important to understand the difference between those types of positions. Scott?
Mike, that's a great general takeaway, I think, for option strategies as they approach different choices for options strategies. Buying options, whether it's an individual call, vertical spread, like you said, it's typically what you paid for it, or oftentimes is, even calendar spreads, right? But being short or selling short, that's a different story. So maybe what we can do is go into the Thinkorswim platform now, and we'll demo how options traders can easily access this information. And tell you what, as you're explaining, Brett, I'm going to go ahead and follow you on the Thinkorswim platform itself.
Okay, Scott. Let's start this by going to the trade tab, and we'll just enter any ticker symbol there. And then we can create an option strategy and move it over to the Analyze tab. And from there, we can review those reward risk parameters. Let's just say, for example, we buy a call just to get started here. Now, once that is created, you'll see the order pop up in the order entry tools box. Once there, with a simple right click on that row, a trader could choose Analyze Trade, and this will automatically move that over to the Analyze tab. Now, Scott, it's from here. The defined risk nature of the trade will be displayed along with the potential gains. That can be seen right there in the risk profile, Scott.
Got it, right. So I'm looking at a long call here, and let me just bring up a little bit so we can see what that call is. We purchased the 133 call. So this call will give the owner the right to buy 100 shares at $133 a share. And it's currently trading around $4 for that option. Now, again, we see the hockey stick shape, which we're very familiar with, Brett, or at least we should be, or we're developing that familiarization. And here's the hockey stick. The blade is what we paid for it. And again, that's the defined amount of risk. So you can see no matter how low the stock goes here on this axis, it's a fixed amount. It's whatever we paid for that call, $4.15, $415. Whereas on the other hand, the handle of the hockey stick is unlimited. It just keeps going into infinity. So the higher the stock goes, the more profit potential there is for that call. Again, remember, profits are up here. This is the zero P&L, and then the losses are below it. So obviously we want to be on the blue line, which is the expiration day P&L. We want to be up in this area, ideally. So got it. So far, so good, Mike. I think we got an easy way to see the risk profile breakdown of this, the defined risk to the downside and unlimited potential gains to the upside, right? So far, so good?
Absolutely. Now, Scott, by way of comparison, let's just go ahead and flip that call from a buy to a sell and see the difference there. You're going to see that strategy go from an unlimited potential gain. It's going to flip over to the opposite. It becomes an unlimited potential loss.
Got it, right. So now we're back to that other example you were talking about, selling a short call. Well, there you go. The higher the stock goes now, look at those gains. I'm sorry, losses. They continue and they go on into infinity as well. If the stock were to go lower, well, there's a maximum loss on that. I'm sorry, maximum gain on selling that call. But yeah, you're right. If the stock goes higher, there's unlimited risk. So you can see that. What about the confirm itself of this trade, Brett?
Hey, so I'm glad you brought that up. We can go back to the trade tab, and this will be where we originally created that trade. And this time we'll just go ahead and click that button called confirm and send. Now, when we do that, just to remember, this will not send the order directly to the market, but will open an order confirmation dialog box. Now, this is where important information on that order can be verified before choosing the send order to the market for potential execution. Now, Scott, let's just take a second to review the max profit and loss numbers on this screen.
Yep, there you go. It confirms just what we saw on the risk profile. Maximum profit, unlimited or infinite. Maximum loss, whatever you paid for that option, $4.20. That's $420 plus any transaction fees. All right. Well, Mike, we're going to have to wrap it up there. This is a great primer, I think, for everybody about what are the easy ways to see maximum gain, max loss in a visual sort of graphic form, and, of course, on the order confirmation dialog box itself. All right. Well, that's going to do it. Thanks again, Mike. We look forward to you joining us throughout the week. That's going to do it for us today. Don't forget, we'll be back tomorrow at noon Eastern time to follow up on our example trade on Microsoft and get ready for some example trades based on earnings coming this week. We look forward to seeing you then.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you an active trader? Our Active Trading webcast series is designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
"24/7 access to diverse global markets. Right here."
That's why I added stock index futures to my trading strategy. Now when I see ups and downs coming, I'm ready.
Well played.
What do you look for when you trade?
I want free access to research,
Yep, TD Ameritrade's got that.
free access to every platform.
Yeah, that too.
I don't want any trade minimums.
Yeah, I totally agree. They don't have any of those.
I want to know what I'm paying up front.
Yes, absolutely.
Do you just say yes to everything?
Well, I say no to kale. Yeah, they say if you blanch it, it's better, but that seems like a lot of work.
Now offering 0 commissions on online trades. We charge you less, so you have more to invest.
Technical traders, the chart master is in the building. Trends, support and resistance, key patterns, and technical indicators. The chart master has your live technical analysis throughout the trading day, only on the TD Ameritrade Network.
Feel that? That's the beat of global markets, the rhythm of the world. For most, the cadence of today. To us, the pace of tomorrow. It's people and machines uncovering opportunity. Cloud computing providing endless capacity. Blockchain making transactions safer and faster. New markets born where they weren't before. With ingenuity, technologies, and markets expertise, we create the possible. And when you do that, you don't chase the pace of tomorrow. You said it. NASDAQ. Rewrite tomorrow.
Good afternoon and welcome to the Watch List. I'm Tom White, filling in for Nicole Petalides. It's 12 p.m. right here in Chicago, Illinois. Let's take a quick look at the markets with only 3 hours left in the trading day. We've actually turned a little bit mixed. The S&P 500 now in positive territory, trying to make some more headways into record territories. Got the Dow Jones Industrial Average down nearly 0.2%. The NASDAQ 100, the tech-heavy NASDAQ, down 0.1%, and the Russell 2000 down 0.2% on the session. Let's get to our top story. Stocks were down modestly, but now we're seeing mixed trading today as muted volumes ahead of the anticipated earnings season has traders in a holding pattern. The first quarter earnings begins on Wednesday with expectations set for positive news and an uptrend for U.S. equities thanks to recovering economy. Technology shares have led this month as rates have stabilized with the 10-year yield hovering just below 1.7%. Now, for more on that, let's bring in our first guest, and that's George Tillis. He's a contributor across the TD Ameritrade Network to help us break it all down. Welcome to the show, George. We've got stocks that were modestly lower to start the session, George, but we're starting to make some inroads. Seems like you can't fade a boring market at this point right now, right?
No, I don't think so, Tom. I think, every day we're either in a trend or a trading range day. And I think this is a trading range day. We're starting to recover off some of the earlier lows across the board in the markets. I think right now we're seeing interest rates being well behaved. I think that's what we have to consider when we look at the equities, at least in the last couple of weeks or so, with the S&P hitting some new highs and now the NASDAQ itself reaching once again those highs. And I think overall, this is a healthy market where we're seeing a rebalance back into the technology names, which have overall been sold off, particularly the secular technology names, those that have more growth versus earnings. We've seen some of the value technology names like Intel, Oracle. Those are a couple of names that have done very well. But overall, I think we're at a trading range day today, because if you look at the NASDAQ itself, I don't know the number of days, but it's been up quite a few of the last 10 days in terms of trading. And overall, we could expect a short-term pullback, and that might be what we're seeing today.
Yeah, and you mentioned that as far as the tech names leading, as those rates have stabilized a little bit, we got NVIDIA up on some positive news out of their investor day, taking a hit to AMD and Intel, some other players within that particular space. But we've got some individual news here also, George, and we'll lead off here with Microsoft putting a bid in, $56 a share for Nuanced. And Nuanced, actually, we talked about this last week. We had Dan Ives on from Wedbush, and he said this was one of his top picks. Who knew it was going to work out so quickly for him, as far as his pick on Nuanced is one of his top names in the tech space. What are you seeing here on this deal? Because Nuanced trading around $53 a share, a little bit below that bid that Microsoft put in.
Well, I mean, it was good timing for Dan, who's a great analyst from the growth technology side of the equation. But I think this is an interesting play for Microsoft. Artificial intelligence is really the reason, Tom. Artificial intelligence as a service, I think, is going to be a theme throughout 2021. Nuanced Communications and this $20 or so billion deal that Microsoft is putting an offer in for is based upon artificial intelligence. Nuanced had been and still is a speech recognition company that actually made a lot of advancements in terms of their technology prowess in artificial intelligence and machine learning, particularly in the Medicare medical space. If you look at Nuance's technologies, about 80% of hospitals in the United States use their technologies. And I think AI technology, machine learning, it really goes along with telehealth. We know telehealth has been very large market and since the pandemic. It is going to continue to grow. This places Microsoft with their software services behemoth in the healthcare space, and that's particularly where Nuance focuses their technologies in. So this has been a fantastic story for Nuance as an AI company and developing that software, but now Microsoft is through inorganic acquisition moving quite closely or closer into the healthcare space. And I think this is a good move for Microsoft. It's actually the second largest acquisition it's historically made. The last large acquisition was LinkedIn, which has actually proved since 2016 to be a compatible company in the social media space for Microsoft.
Yeah, Microsoft hitting more all-time highs again today after struggling throughout March. But we've got another stock on the move, up nearly 9%, George, and that's Alibaba. Kevin and I, always on the network, we always talk about this. There was unknowns here, right? Alibaba had slipped significantly from its all-time highs that we saw last October, but now up on this news because they put a number on it, George, on this fine, and I think that's a big key here, but up nearly 9%. Does this mean all clear for Alibaba moving forward?
Well, I think so. And the reason I say this, and I think it's good to point out also, this stock has been drifting lower since October. It fell quite a bit faster, even before than a lot of the technology names. And one of the primary reasons was the regulatory overhang that Alibaba had faced. Jack Ma was trying to bring Ant Group, which is basically a financial technology company, public. The Chinese regulators halted that. And I think there was a lot of regulatory scrutiny over oversight, especially when it comes down to Ant Group. And I think the Chinese regulators used their enforcement tactics as anti-competitive tactics against Alibaba to bring Ant Group into compliance from a standpoint of financial regulation. So The fine itself is rather large in terms of dollars and cents at $2.8 billion, but this is a regulatory overhang that had been really damaging Alibaba. I mean, the stock is down despite the fact that it's up 9% today, about 20% in the last 6 months. So I think this is a regulatory overhang that is now behind Alibaba. This is probably going to move the Ant Group IPO back into recertification, and I think that's one of the reasons why we're seeing this stock quite a bit to the upside, because there's a lot of valuation analysts that say that this stock should be around $300. I would agree with them too, Tom. But I think now that this regulatory hurdle seems to be away from Alibaba, you'll probably see more upgrades. And we're also seeing a little bit of weakness in the other Chinese technology names and Chinese companies, because I think there's some regulatory scrutiny facing other companies like Baidu and JD. And that's maybe why they're trading to the downside. But I think Alibaba right now has got sort of a green light in terms of recertifying that Ant Group IPO, and I think it's a major catalyst.
Yeah, I think that the regulatory overhang for a lot of those companies put them under pressure here today. We'll see if that plays out. We do have most of those names down besides Alibaba, including Tencent Music also. All right, George, thanks so much for the rundown here. Appreciate it. That's George Tillis.
Sure, Tom.
Yep,
You bet.
He's a contributor across the TD Ameritrade Network. Now let's welcome in Joe Brasuelis. He's a chief economist at RSM. Welcome to the show, Joe. Appreciate you being here today. Just reading through some of your notes, I'm looking at the growth estimates, and we've gotten some commentary out of the Fed governors today and last week. Fed Chair Powell in his 60 Minutes hit yesterday. But he was pretty bullish on not only the economy, but he didn't really mention an asset bubble for stocks here. But as the economy opens up, the vaccine rollout picks up. What are your projections for GDP this year? Because it seems like every other day we get another spike higher in those estimates.
Well, I think we've been a little bit out in front of that because of our surveys and our connections into the real economy, which is really going to drive the recovery here. So look, for 2021, my growth rate's 7.5%. I'm expecting 4.8% next year. By the end of this year, I'm expecting that the unemployment rate will be standing at 4.1%. The 10-year right around 1.9.
All right, guys, I am going to have to cut things short today. I might be back a little bit later. I can get back by about 1:30, 2 o'clock. I'll get back on for the last hour of the day, but I don't know what's going on this afternoon. I've got an appointment to go to this afternoon, so I'm not sure if I'll make it back or not. But if I do, great, I'll see you then. If not, adios. Real quick wrap up. GameStop still just dying today. It's down 10%. Luckily, it's leveled off for those of you that still own stock. AMC tried to make a run back. KOSS tried to make a run back. Down 6.5, 6.5, 4.5 over here. But I do see TQDQ making a little bit of run. So hopefully some of the major markets, especially the tech markets, are making a run back. That'd be awesome. So I can turn this baby around. Good day today. Otherwise, guys, I'll see you later. Maybe today, maybe tomorrow. Adios.